Usually people say you need 20% of the home purchase price for your down payment. And that makes people feel really discouraged, thinking that they will never be able to afford a home. And I'm here to tell you that you may not need as much money as you think you do. Today you're going to find out exactly how much you will need for a down payment on your home. I am Tiffany Thomas with wealthytiffany.com, and I achieved financial freedom at age 38, and I did that mainly through investing in real estate. So if you are looking to achieve financial freedom at a young age as well, hit that like button and hit the subscribe button, and we're going to dive right in. There are a few main factors that go into deciding how much you're going to need for a down payment on your home. The first one is the lender that you end up choosing. The second one is your credit score. And the third one is the type of mortgage loan that you end up going with. And today I'm just talking about a property that you are going to move into. I'm not talking about strictly rental properties. When you are deciding which lender you want to go with, there are some that have really strict requirements for getting approved for a mortgage loan, and there are some that are a little bit looser standards, and they have different interest rates and different closing costs. So you just want to make sure that you get at least 3 estimates and see which one is going to be the best mortgage loan for you. And now regarding your credit score, you want to have the highest credit score possible so that you can get the lowest interest rate possible. And when you have a higher credit score, that means you will more easily get approved for a mortgage loan. And if you're wondering how to increase your credit score, I did create another video about that, so I will leave a link above and below in the description. You can check that out later on. And if you don't even know what your credit score is right now, I use a free app. It's called Credit Karma. And you can check your credit score free of charge, and they give you recommendations on how to improve your credit score. So I will leave my referral link below, and you can set up a free account with Credit Karma and check your credit score and figure out how to rise that credit score so that you can get a lower interest rate on your mortgage loan. All right, let's talk about the types of loans. There are a number of different types of mortgage loans out there, but I'm just going to talk about 2 specific loans because these are the most popular loans. One is the FHA loan, which stands for Federal Housing Administration. That means that loan is backed by the FHA, the Federal Housing Administration. And the other one is a conventional mortgage loan, which is not backed by the FHA. But you can get either of these loans through pretty much any lender out there. You can look at a local bank in your area or even a local credit union, or you can look at a national bank. A lot of lenders provide these 2 types of loans. Let's talk about a few differences between these 2 types of loans. With conventional loans, it usually requires a little bit higher of a credit score. It allows slightly smaller down payments, and it has more liberal property standards. They aren't as strict about the type of property that you have to get into. And they require private mortgage insurance, which is PMI, when the down payment is less than 20% of the home purchase price. And that mortgage insurance can be canceled later on, and we are going to talk more about that later. Regarding FHA loans, they allow lower credit scores, require slightly higher down payments, and have stricter property standards. And they do make FHA mortgage insurance mandatory regardless of the amount of your down payment. And it can't be canceled unless you refinance into a conventional loan. And I've actually heard a few differing things about the mortgage insurance on an FHA loan. So if you end up going with an FHA loan, make sure and ask your lender specifically if that mortgage insurance can be canceled. And we are going to discuss that mortgage insurance in just a little bit. If you're curious where your credit score needs to be for these types of loans, if you have a credit score below 620, you are unlikely to qualify for the conventional mortgages. So then your FHA loans are the most likely option for you. And if you have a credit score of 720 or higher, you will usually find that conventional loans will cost less per month. And if you have a credit score lower than 720, you will usually find that FHA loans cost less per month. So depending on where your credit score is, you may have to go with an FHA loan instead of a conventional loan. And if you are looking for a loan that is a really high amount, the FHA loans have a limit on the loan amount that they can give out. The 2020 FHA loan limit is $356,362 in low-cost areas and $822,375 in expensive markets. So just be aware, if you are looking for a really high amount for your mortgage loan, you may need to go with a conventional loan. Now that we know a little bit about each of those types of loans, let's talk about the down payment amounts that are required for each of those loans. FHA loans are available for as little as 3.5% down if the borrower has a credit score of at least 580. If the borrower has a lower credit score, 500 to 579, the minimum down payment is 10%. So you don't need that full 20% down. You can go with 3.5% if you're going with an FHA loan. If you want to go with a conventional loan, the lowest amount is usually 3%. For example, if you are buying a house that is $300,000, if you go with that FHA loan, that 3.5%, you would need $10,500 for your down payment. And if you were going with a conventional loan at 3%, then you would only need $9,000 for your down payment, compared to 20%, which would be $60,000. So you can see why, if people are thinking they need 20% to put down on their home, that they will never get into a home. That's a significant amount of money, but in actuality, you really don't need that 20%. But let's talk about why people say you need that 20%. We are going to now talk about that mortgage insurance that I mentioned earlier. If your down payment is less than 20%, with an FHA or with a conventional, then you're going to be charged a mortgage insurance fee. With conventional loans, it's called PMI, private mortgage insurance. With FHA loans, it is called MIP, mortgage insurance premium. This PMI or MIP, this mortgage insurance, protects the lender. They are thinking if you default on that loan, then they are going to owe a lot of money for that house. But they have created this extra fee that if you're paying that along the way, then they have this extra money so that in case you do default on the loan, then they have that extra money to help pay for that mortgage. If this is making sense so far, comment below, "Got it, Tiffany," so that I know you're understanding. For me personally, I did have private mortgage insurance on one of my homes that I purchased. I wanted to get into the property for as little down as possible. And so I put down, I think it was 5%. So I had to pay this extra fee each month, but that fee was only $69 per month. I bought the house for $211,000. But since I did it with a conventional loan, I was able to get rid of that PMI later on. There are a few different ways to get rid of that PMI, that private mortgage insurance, and I created a different video about how I was able to do that, so I will leave a link above and below. You can check that out later on. But that doesn't have to stay with you for the entire term of the loan. When you have a conventional loan, you can get rid of that PMI automatically when your loan to value ratio is 78%. So when you've paid off at least 22% of that loan amount, the lender is supposed to automatically take off that mortgage insurance. I personally wouldn't trust that. I would contact my lender and say, I need this removed. You can also get it removed at 80%. So when you've paid 20%, you should be able to get rid of that PMI, that mortgage insurance altogether. But make sure and contact your lender and tell them to do it, because if you leave that on there, that little charge will add up over time and you're paying more than you really need to. With an FHA loan, it's a little bit different. I know I mentioned earlier that it's not possible to get rid of that mortgage insurance with an FHA loan, but there are certain circumstances where that could be possible, depending on your lender and when the origination of the loan started. So I would double check with your lender to see if you can get rid of that mortgage insurance. And that's even if you already have the loan, and if you are setting up a new loan, then make sure and clarify with them if you're able to remove that charge, because you may not be able to. So that is one downfall of an FHA loan. Basically, you don't have to have that full 20% for a down payment. You can have that 3% or 3.5% depending on which loan you are going with. And yes, there are other loan options out there that could be 0%, but one of these would be for the majority of people out there. Now that you know you don't have to have 20% down in order to purchase a home, you just have to decide if it's worth it to put less down and get into that house and pay that mortgage insurance. For me personally, it was worth it because I wanted to get into that property and I wanted to invest in another property. So I wanted to keep my down payment as low as possible because I didn't want to pay any extra for my down payment because I wanted to put that toward a down payment on another property. So it depends on your circumstances, what you're going to do with that money, and how long you're going to live in that house. And if you are keeping that long-term mindset, then eventually that property will appreciate over time. And of course, you have options later on. You can always refinance, or there are different ways to get rid of that mortgage insurance on a conventional loan. So it could be worth it to put less down and pay that mortgage insurance depending on your circumstances. And if you are going to live in that house, maybe it has a separate mother-in-law basement apartment that you are going to rent out, so that rental income that you would be receiving would totally offset that mortgage insurance cost. And as we've seen lately, home prices have increased greatly in value. And over time, that's what will happen. So if you really want to get into a home now, you do have the option of doing a lower down payment. Comment below and tell me the percentage of the down payment you plan on putting down when you purchase your home. And if you found this video helpful, please hit that like button and share it with someone else who would like to hear about buying a home. And hit the subscribe button to subscribe to my YouTube channel, and hit the little bell to get notified on when I post new videos. And if you want to see more content from me, make sure and check out these videos over here on the side of the screen. Thanks so much for watching. I'll see you in the next video.